Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll discuss today one profit reconciliation statement question which is of comprehensive nature. Let us read the question. Following is the profit and loss account as per financial records of Messrs. Tirupati Traders for the year ended 31st March 2008. Opening stock finished goods 6,000 units. In case of cost sheet, we add this item to cost of production. Raw material consumed, direct materials, carriage inwards, it will be part of direct materials. Direct wages, that is direct labor. Salesman commission, selling overheads. Office salaries, administration overheads. Motor car expenses, administration overheads. Advertisement, selling overheads. Director's remuneration for looking after office work, administration overheads. Looking for factory works, factory overheads. Looking for sales work, selling overheads. Indirect wages, factory overheads. Plant depreciation, factory overheads. Workmen's compensation reserve, this item is not recorded in cost sheet. Office rent, administration overheads. After sales service expenses, selling overheads. Interest, this is a finance expense which is not recorded in cost sheet. Showroom rent, selling overheads. Carriage outwards, selling overheads. Sale of 90,000 units, it will be recorded in cost sheet as sales. Closing stock of finished goods 4,500 units, this will be deducted from cost of production. Bank interest received, this is income particular to financial book, it is not recorded in cost book. Dividend received is an income particular to financial book, it's not recorded in cost book. Depreciation on delivery van, selling overheads. Factory fuel, factory overheads. Packing and forwarding, selling overheads. Miscellaneous factory expenses, factory overheads. Preliminary expenses written off, this item is not recorded in cost sheet. Audit fees, administration overheads. General office expenses, administration overheads. Factory rent, factory overheads. Loss on sale of investment, this item is not recorded in cost sheet. Insurance, office, administration overheads. Insurance related to sales department, selling overheads. Insurance related to factory, factory overheads. Printing and stationery, administration overheads. Depreciation, factory furniture, factory overheads. Office furniture, administration overheads. Showroom furniture, selling overheads. Telephone charges, office, administration overheads. Sales, selling overheads. Legal fees, if legal fees is taken as administration overheads, it will be recorded in cost sheet also. If legal expenses are abnormal items, then they are not recorded in cost sheet. Here we assume that legal expenses, legal fees is of normal nature, so it will be treated as administration overheads. Profit transfer to balance sheet. This is profit as per financial book 2,59,226. Closing stock in cost account is valued at cost of production. That means while preparing cost sheet, we are required to value closing stock at current cost of production per unit. However, opening stock in cost record is same as per financial records. Prepare detailed cost statement showing total cost, excluding per unit and profit. Secondly, reconciliation statement showing reconciliation of profits. Raw material consumed 5,19,400. Carriage inwards, it will be part of direct materials 5,100. So direct material cost will be 5,24,500. Direct wages 72,872. So we got prime cost 5,97,372. To this we are required to add factory overheads. Directors remuneration works 12,000. Indirect wages 20,268. Plant depreciation 11,472. Factory fuel 4,248. Miscellaneous factory expenses 3,270. Factory rent 18,720. Insurance of factory 1,800. Depreciation on factory furniture 600. So we have recorded all expenses relating to factory. So we can add that to arrive at amount of works cost. To works cost, we are required to add office and administration overheads. Office salaries 25,368. Motor car expenses 18,384. Directors remuneration of office 12,000. Office rent 6,900. Audit fees 2,520. General office expenses 1,500. Insurance office 300. Printing and stationery 720. Depreciation on office furniture 900. Telephone charges office 129. Legal fees 504. We have recorded all office overheads. We'll add them. So we got cost of production 7,38,975. Now, how many units are produced, that we are required to find out. There is opening stock 6,000 units, units sold 90,000, and closing stock 4,500. Formula is units sold is equal to opening plus produce minus closing. So sold we have 90,000. Opening we have 6,000. Produce we are required to find out. Closing is 4,500. So here unit produced are we have having opening stock 6,000 units, closing stock 4,500 units, and units sold were 90,000. So units sold 90,000. To this we can add closing stock units 4,500, total 94,500 minus opening stock units 6,000. So actual unit produced are 88,500. So per unit cost of production comes to 8 rupees 35 paise. To this we are going to add opening stock of finished goods 6,000 units, value 59,760. So it will be 7,98,735. From this we are required to deduct closing stock of finished goods, units 4,500 multiplied by per unit cost of production 8 rupees 35 paise. So it will be 37,575. This will be deducted. So we have arrived at cost of goods sold 7,61,160. To this we are required to add selling and distribution overheads. Salesman's commission 38,520. Advertisement 61,920. Directors remuneration, selling overheads 14,400. After sales service expenses 4,476. Showroom rent 9,000. Carriage outwards 6,240. Depreciation on delivery van 5040. Packing and forwarding 3,270. Insurance sales 720. Depreciation on showroom furniture 420. Telephone charges sales 627. So we got total cost of sales 9,05,793. Sales as per financial book is 11,70,000. 11,70,000 will be taken as even sales as per cost book. So profit as per cost book is 2,64,207. We are required to make working notes, particular, that is items of income and expenses as per particular books of account. Figure in financial book, first column, figure in cost book, second column. Our solution profit reconciliation statement, we are going to start with profit as per financial book. Therefore, first column we have kept for financial book. We are having both the profits. If we decide to start profit reconciliation statement with cost book, while preparing working note, we are required to take care that first amount column will be cost book and second will be financial book. Last column is of difference, whether we are required to add or subtract. These signs will help us to prepare profit reconciliation statement. We have bank interest 410, that is recorded only in financial book. Next we have dividend received 6,900. This is also recorded in financial book. Workmen's compensation reserve 13,275. This is recorded only in financial book. Interest paid 6,000. Preliminary expenses written off 4,200. Loss on sale of investment 4,017. Finally, there will be difference of closing stock of finished goods. In financial book, closing stock is 52,776. In cost sheet we have closing stock of finished goods 37,575. Now we can fix the signs. 13,275 minus nil, it will be plus 13,275. Interest 6,000 plus 6,000. Preliminary expenses written off plus 4,200. Loss on sale of investment plus 4,017. Bank interest 410 minus 0. It should be plus 410, but in case of incomes we are required to reverse the sign. We'll take minus. Dividend received 6,900 plus, we'll reverse the sign, minus. Closing stock of finished goods 15,201 plus, but we'll have to take minus. From first column, figures are deducted from the second column. These plus minus signs will help us to construct profit reconciliation statement. Profit as per financial book 2,59,226. So working notes will be adding the items. Workmen's compensation reserve 13,275. Interest 6,000. Preliminary expenses written off 4,200. Loss on sale of investment 4,017. Preliminary expenses written off 4,200. Bank interest received 410. Dividend received 6,900. Closing stock of finished goods 15,201. These plus items were added to this profit as per financial book. We got 2,86,718. These negative items we have added total 22,511, which is subtracted from this figure. Finally we got 2,64,207. That is profit as per cost book. This is the cost sheet end point. Profit was 2,64,207. We are exactly getting this 2,64,207. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.